Going on, guys? It is BGFX. I'm coming at y'all with a brand new video. It is currently 2:22 a.m. man. We have London session right around the corner, but being that I don't really see any trade setups right now, I figured why not make a video for the YouTube channel and drop some new content for you guys. So currently we are on GBPJPY on a 30-minute time frame, and I want to walk y'all through the trade setup that we actually took Monday morning during London session. And this was a buy on GJ that overall was very clean and was overall a very nice trade. So at one point of us being in this position, we were running nearly 80 plus pips from our initial entry price. I'll go ahead and throw up some screenshots from the VIP alert room so you can see when I actually called this to the team. But overall, man, we can see that the movement on GBPJPY was very nice. So let me go ahead and actually walk you guys through why I did decide to go long on this pair. I'm going to go ahead and start the analysis off on the 4-hour time frame. So if we look right here, GBPJPY on the 4-hour. One level that really caught my attention was the 135 psychological zone. You can go ahead and get your zone, draw it out right here. We can see that for the most part, man. I know I've recapped this entire area on GJ in the past, as well as that transition of price making this low and then failing to make a lower low, kind of signifying bullish movement. I've walked you guys through that in the previous videos, but just in case you haven't seen those, basically I stated that since GJ pulled back, made a higher low, that kind of signified I want to see bullish pressure moving to the upside, and that's pretty much what is happening so far. And we were able to capitalize on a nice little movement at the beginning of the week to really start with some good momentum. But yeah, back to what I was saying. Okay, GBPJPY 135.00 psychological zone, very clean area that I did want to see. I was looking to see what type of potential reaction we could have here on price. So of course at this time we noticed like July 9th around the area, we noticed that price broke to the upside, pulled back, and literally showed no rejection. Okay, it showed no rejection, it pushed to the downside, made these new lows, and we had slow descending channel around this area before we had this initial push to the upside. Now once we did have this initial push, my first thing, I wanted to see if price broke these highs. Once I did see the highs being broken, I was anticipating a pullback, and we did see another high being made in these markets. So at this point, you can go ahead and draw a trend line out. Now, those of you guys who've been following my content for a minute, you know that I don't really use trend lines for entries. It's not something I do. It's just something I use to get a little standpoint, kind of a bias on the market. So if you notice here that price is pushing to the upside, I personally wouldn't buy around this area. Reason being is something I like to call an overextended market. I'll get into that in a little bit, but we can see that we had a deep pullback to kind of exchange the orders of these markets. Being that so many people were going long, we had to somehow shift the bias from buys to sells. So we've seen that deep pullback. And around this area, I really want to see how price reacted. So we've seen that bearish candle push to the downside right here. And this wasn't really like an engulfing type of candle, but we do notice that it was just overall a very strong bullish candle occurring right here after the bearish candle. So you can see right here, I can't really get it to even out, but you guys kind of get the concept. And then we had price push up to this level. Showing a little bit of rejection, but at that point we did get that somewhat of a hammer candle, and then a very nice push to the upside on GJ. So I want to go down to that 30-minute time frame right here, and for the most part you can draw something like this, and you can see that price made this level. Okay, now if we start this breakdown from here, we could see that when price did initially make this bullish run, kind of what I noticed here is we had this area of buyer accumulation. Now what I mean by buyer accumulation is most retail traders were potentially looking at this as a buying zone, because most retail educators, you know, teach to buy on support. Now I know at this case, at this point, this isn't necessarily something I'd want to get into, just because I know the market doesn't move like this. Okay, especially on a pair like GJ. One quick tip is always understand your pair and get to know your pair and how it moves. Okay, so that's really something that comes about through experience and time. But I know that GJ doesn't move like this. Okay, I know that if GJ trends strongly, just from personal experience and just from time being in the markets, I realized that if GJ does make a strong push to the upside and it does begin to make some type of support resistance, a lot of times if the trend is looking to continue, you'll see a push to the downside to really exchange the orders from buying to selling, and then you'll see that continuation up. So that's kind of what we had here in the markets. We noticed that they did induce the buy after this push to the upside. So around that area, we had a lot of retail traders looking to go long. Now in my VIP chat, I actually called the complete opposite, and I actually called sells around that 618 through 786 level, which is where I like to see my retracements on my M and W formations. Now this wasn't what I called out Monday. This is something I actually called out last week. I ended up missing my entry, but a few of my students did get in at that 618 level. Stop loss right here. And overall, if you kind of pay attention to what happens here, you can see that once price does make this push to the upside, the reason I believe this was an overextended market is because we noticed that price began to consolidate and it hadn't even pushed down back to the 0.5 through 618 level. Now don't get me wrong, there is cases where price can push to the upside and then continue up, but like I said, you always got to figure out what works for you. Just from personal experience, I did realize that, you know, GJ is a pair that likes to push to the downside and it likes to pull back before it actually continues to the upside with a trend. So at this point, I see my valid information. Not gonna get too much into that, but got me into the trade, triggered me in, pushed to the downside, and at that point we did kind of get an exchange of those orders, and then we had to push back to that 200 EMA, and then a new high being made. Pretty much same thing happening. We seen a little bit of rejection on here, inducing the buy for most retail traders, push to the downside, retest information, another profitable trade, and at that point we started fresh this week, and I'll go ahead and clear everything off my charts in a second. I'll just go ahead and clear it now. But we started off this week very clean. All right, we started off, we seen that price push to the downside initially after making this previous low. So we had this low in the markets, we had a push to the upside, and a new low being made in the market. So I kind of wanted to see what would happen around this area price. So I didn't really have a bias to either go long or short, but I just more of wanted to kind of see how price was potentially going to react to this level. So at this point we did have somewhat of a decent area of potential selling control around this time. Now if I would have seen something like this happen and a break of this low, I probably wouldn't have been looking to go on long anymore. Okay, I wouldn't have been trying to buy into a market that shows specifically that we had sellers in control. So we did see this level, we seen a push to the downside, new low being made. So I was looking at the same thing to happen from the top of this market structure. I want to see something like this, push to the downside, new high being made. Now the type of trader I am, I don't necessarily strictly trade with the trend. So just because price is looking like it's coming down for the time being, I still like to trade my pullbacks. I still like to trade the flow of the markets, okay? Because you got to understand, as buyers and as sellers, regardless of what type of market condition you're in, you're gonna see people looking to buy and you're gonna have people looking to sell, regardless of your analysis. The market shifts order types, because if it was strictly buyers in control, we would have no one selling. You know, if it was strictly sellers in control, we would have no one buying. So the market's a zero-sum game. Every time you lose money, someone else is making money. Every time you make money, someone else is losing money. So there's always going to be a shift of the type of orders. So that's kind of why I try to keep an open mind of my trading direction, regardless of what is actually happening in the markets. And it takes a minute to kind of get a full understanding of, you know, I'm not saying trade against the trend. I'm just, you know, trying to find what works for you. You know, this is what works for me. But we've seen this new low being made. I'm not trying to get too much off topic here. We had our formation occur. We seen price push to the downside. It made this low. It pulled back again from that 20 EMA. As we know, that 20 EMA began to show reaction on a few different occasions right here, showing that we did have a pretty strong trend to the downside for the time being. We seen that W formation. We seen that fail to break that low. New high being made. Price closing above the 200 EMA. And at this point, this was my first clue that potentially we did have a shift of the directional movement in this market. So I was looking to trade this pullback to the upside before we potentially see another wave to the downside, or before we see another breakout to these previous highs, or maybe even pushing even further up to the upside. So if we come right here, We take our Fibonacci, we click it from here to here. My entry was 135.325, so it was somewhere around this level. Final targets were at the 618. Stop loss was somewhere around here at 134.93, I believe. I decided to go a little bit wider with the stops just to be safe on this one. But then at the same time, I do use a percentage based risk. So it's not like because my stop loss is 40 pips, it doesn't mean I'll be losing more money than if my stop loss was 20 pips. I'm always going to adjust my lot size according to the type of risk that I'm taking on, or the size of my stop loss. So if I have a 40 pip stop, I'm still gonna have 2% risk on the line, okay, from my potential 5+%. So you're always going to want to keep that in mind. Try not to correlate pips with the size of your wins or losses, even though pips do measure. Pips do measure your returns to a certain extent based on your lot size. I still like to pay attention to the percentages themselves, okay? So if we notice right here, percentage-based risk, 2% to make potential 5%. When it comes to me actually managing my position, I seen that we did have rejection, and I actually entered right here. But I seen that we had rejection. We seen that around this level, price began to approach these Fibonacci numbers. Now, these Fibonacci numbers are pretty much where you're gonna look at the length of your pullback. So the more that price begins to push through these Fib numbers, that pretty much shows that your trade is becoming more and more invalidated. So something I did want to see here is some rejection off of any one of these Fib levels. So if we look right here, we take a little closer look, you can see that for the most part we had rejection off of the 786, which in this case, gave me a little bit more confidence in my trade and allowed me to kind of understand, like, okay, nothing to really worry about. And once again, it keeps my trading systematic. If I didn't have the Fibonacci's here, I might have been stressing a little bit, just seeing that price broke these previous lows here, broke this little level. So having that 786 as an area where price formed some candlestick formations, and then we began to have an impulse correction, push to the upside, new highs being made. Once I did see these new highs being made, I went ahead and moved my stops to break even, and I also advise my students to move their stops to break even, so this could be a risk-free trade. In terms of when I actually exited myself, okay, I went ahead and took my fixed range volume indicator, and I took it up from this high all the way up to this level before our descending channel was broken. So basically what I'm measuring here is my time period in which sellers were in control. So if we draw this channel out, you can visually see that the directional movement of prices to the downside. So when I'm taking my fixed range volume and I'm bringing it from the top to the bottom, I'm looking at where the most volume in the markets was accumulated throughout this time. Okay, this is something that support resistance zones won't show you, something that no indicator will show you. So what you can do is draw a box around your POC / point of control, and you can see how price reacts to it. Now, of course, we do see that price eventually broke above it, but when you're looking at this in real time and you see that price rejects off your POC, remember that this does act as a value zone, so you could potentially be seeing how price reacts around this area. So once I did see price wick off of the POC and open up as a bearish candle, I actually ended up closing at the 0 level for about 50 pips. And then we did have price push back to break even, so it was a pretty good decision for me to close around that POC after seeing that rejection. So for the most part, guys, you can see that this is a pretty clean setup. Nothing too crazy. Like I said, I wasn't really trading directly with the trend or against the trend, but more of just trying to see what direction was best to stack up with some confluence. So if we look right here at what happened last week on GJ, we can see that price was trading to the downside, but for the most part, if you begin to look at these lows, price failed to make any type of new lower lows. So at that point, that could be a first hint. I also took a trade on GBPJPY around this area. I believe I entered right after the EMA crossover right here, and then I took price up around 128 pips, and that actually went into profits very quick. I believe it was this wick here, and we ended up going in profits about 30 plus pips in literally one candlestick. So that was a pretty insane setup as well. Unfortunately, couldn't really alert my VIP chat for that one, just because price went into profit so quick, and I couldn't really call it anymore unless we did get a pullback. But you can see that from that area, price made an extreme push to the upside. Now, something that actually happened here, back to what we were saying about last week, we can see that price made these lows, failed to really break any level. And if you see here, okay, price broke this level. What this does is this accumulates more buyers into the markets, okay? We could also draw this level out. What does it do? It accumulates more buyers into the markets. We draw this third level out. What does it do? It accumulates more buyers into the market. So if you begin to look here, you can see that the market becomes very overextended if it continues to break through levels without having a pullback. So it's something very good to know when you shouldn't be going with the trend and when you should be going with the trend. Now, of course, we never know when something like this is going to happen, but when you stack it in confluence with something like this, price continuously breaking levels without really giving us a deep pullback to kind of exchange orders, you can expect something happening, especially if you notice here that at the top, price slowly began to come to the downside, but our lower level really didn't move yet. So what that's doing, from my point of view, I call this pressure being built into the market. So of course, when pressure is being built up, eventually that pressure has to be released. So that is why I would have recommended selling around this level 618, and the move would have played out perfectly for about 80 plus pips, as well as the second opportunity here that would have played out as well. And then if we come right here, our shift of direction with our pullback actually played out as well, and that was called to the VIP signal chat. If you guys do want to join the team, go ahead and hit the link in the description. If not, that's totally fine as well. I just wanted to drop this video to kind of give you guys a little bit of insight overall. Just trying to put out a little bit of information for free, man. Try to do what I can, you know, to give some tips to you guys. But without further ado, I'm going to go ahead and wrap up the video. Hope y'all enjoyed. It is your boy, BJFX. I'll catch y'all later. Peace.
And I rarely ever chance, rather mitigate the risk, keep my eye up on them bands. I'm just saying, in the land, guess I'm back in high demand.